This interview is part of DBS's digital transformation campaign. It is produced by FT Longitude in partnership with DBS.
Today's businesses are operating in an uncertain environment. Despite this, most are pressing ahead with their long-term plans to engage customers through digital platforms and services. The problem is that digital transformation remains extremely difficult. Barely 1 in 3 companies says that they are doing it effectively. If you talk to the businesses that are getting it right, they will tell you that one success factor is the working relationship that the commercial teams driving transformation have with their counterparts in finance. Many will also say that their treasury teams are increasingly vital to these discussions. How can businesses ensure that commercial, finance, and treasury are working in harmony? I'm Piers Tomlinson, Editorial Director at FT Longitude. Joining me to discuss this are Mark Troutman, Group Head of Sales at DBS's Global Transaction Services, and Ramesh Sankar, Group Head of Digital Channels at the company's Institutional Banking Group. Mark, Ramesh, it's great to be talking with you today. Ramesh, if I could turn to you, first of all, during economic downturns in the past, notably the global financial crisis, businesses have tended to batten down the hatches and scale back on their investment in innovation and new technology. But that doesn't really seem to be the case so much. From the research that we've done, we find that businesses are upholding the momentum that they had with digital technology. Most are continuing with their strategic plans. So I wanted to ask you what you felt was behind this momentum. Why is it that businesses are so keen to continue with transformation despite the risks of the operating environment?
I think the need to digitize and accelerate digitalization is ever more important to corporates, big or small. The rise of e-commerce capabilities, the last mile areas of delivery and logistics have really sparked the ability to create newer business models that allow companies to diversify their existing portfolio using digitalization and really strive to get to new markets ever more is also quite evident in the research that we see. Another big area is the real change or pace of change of technology. I mean, what was areas which could be transformed in about 5 years in the past can be done in probably 5 months. That allows companies to react better and in a cheaper alternatives of technology. And not just that, I mean, if you look at it from the technological advances that we see, whether it's in the form of embedded finance or in the form of now blockchain use cases coming up, the opportunity to also create efficiencies within the organizations are far better as compared to maybe a 5-year period that we used to see a lot more around using digital platforms that are bank-driven.
Mark, I wanted to turn to you now because one of the key things that's come through in the research we've been doing is that treasury teams have been playing a much more influential role in different parts of the business, in commercial discussions, but also strategic conversations about digital transformation. I wanted to ask you what you felt led to the growing influence of treasury teams in the business today. What's behind that trend and why treasury is getting more involved in these kind of what you might call non-traditional areas of the business?
Relatively speaking, within the larger corporations, treasury is the one central group that's charged with keeping its engagement with the range of bankers that the companies use. And in that engagement, they certainly hear and get updates from their various banking partners along the way. But as digitalization has increased, and in particularly successful companies that have managed to look at the entire customer journey around a particular product line or the way that the consumer or the small business engages with the company in order to buy the goods or the services, the successful companies have realized that you need to look all the way through the entire process, not just create a nice web page that is essentially a brochure for services and then sort of pop a credit card, merchant acquiring kind of capability, and that's it. There's so many more opportunities out there that companies can tap into for alternative payment channels, and particularly companies that are selling to a range of age demographics. younger consumers consume differently. And so to be relevant to that demographic, that emerging demographic, particularly for companies that are looking for pull through on a recurring basis into that age group, it's increasingly clear that these successful companies look end to end, and that's really where Treasury has come to the fore and is playing a really strong role.
I suppose with any change like that and any teams getting involved where they traditionally may not have been involved, there is the potential for those conversations to not necessarily be full of friction necessarily, but different teams have different objectives and different priorities. And Ramesh, turning back to you, I wanted to ask what your thoughts were as someone more involved in the commercial side or the digital side, where you feel that sometimes those collaborations, sometimes the partnership isn't as smooth as it could be. What is it that sometimes leads to the relationship not being as productive as it could be?
So I think oftentimes we've heard the IT roadmaps of clients not aligned to a commercial roadmap. Potential areas of frictions include where investment ask and return on investment asked are defined in a more narrow scope as opposed to a broader making a market kind of change. And we tend to see this kind of walls broken down with companies who are leaders in the space really having a common vision of digitalization, of driving a market, making model where the objective being is the end result of either a improved customer journey, a new business opportunity, containing risk, or really automating operations within the firm to gain productivity. And you can't do this until there's a shared vision across the organization, and then all the KPIs and the strategies that align back to the execution is aligned to those vision that is set.
It works really well when it's top of the house on down, so all units align to Ramesh's point. We can also see it in sort of industries that are under threat, where their traditional business models have been attacked, whether it's insurance, it's media, it's telcos. They're dramatically revamping their businesses, and this is where I'd argue that I see quite a lot of engagement, very close engagement between Treasury and the commercial side, because they do have that shared vision of needing to change.
And certainly it's something that we saw coming through in the research. A lot of the businesses that have been most successful, the transformation leaders, talk about a North Star, and having that shared vision that they adopt almost which kind of gives almost like an emotional buy-in as much as anything else, so that they can provide that additional motivation. Mark, I wanted to ask about the other changes that you are seeing within Treasury teams, because obviously we're talking about how Treasury is supporting digital transformation of the business, but part of that for Treasury to become the function that it's evolving into and becoming its future self, so to speak, it's got to think about new technologies. It's got to think about transforming itself. So I wanted to ask you about where you saw Treasury teams adopting different technologies and how they themselves are transforming.
The first is, and in particularly those companies that have adapted or have evolved to be much more focused around the entire customer journey or purchase experience. What marketing or commercial puts out, but also how simple or how easy or how frictionless it is to get paid. Well, a lot of that's starting, especially in Asia, but you can see it in some of the markets in Europe and other locations. A lot of them are starting to tap into the ability for domestic instant payments. Those systems are 24/7, 365 days a year. So it's not uncommon, but see it in insurance through data. People will look at a policy online, decide whether they want to buy something. Maybe it's during their lunch hour while they're at work, but it's actually sort of Sunday night when they get around to it that they actually make that purchase. So the reason I use that as an example is because it creates a cash flow that a treasurer who typically works maybe 7 a.m. to 7 p.m. or very long hours, but typically Monday to Friday, the treasurer now has to think about how he manages liquidity that's coming in on a Saturday and a Sunday. And in small amounts, it's not so material. But as this pivot to more and more digitalized sales takes place, this outside of business hours management of liquidity will become an increasing problem. And so this is an example of where Treasury is, and treasurers and the cash managers within the Treasury function are having to really change the way that they manage their traditional or more sort of legacy practices.
I think for me that immediately leads to a follow-on question about the talent that you need in Treasury teams today and the capabilities, because technology is obviously part of the evolution, but it's not everything. There's got to be other changes as well, including in the skills base. Perhaps as we're talking about Treasury, talking about the talent within Treasury and also where you see that particularly changing, because obviously, yes, it's technology, but there, I imagine, other skills, other capabilities, softer skills that come in as well. Could you please talk about what some of those are?
The emergence of digitalization has required the Treasury community to come up the learning curve to increase their understanding, their experience around some of the technologies that Ramesh and his team natively and intuitively know and use, day in and day out. And so we've ended up in some of my team's work having to sort of blend or both use some of our more traditional IT colleagues to explain to corporate IT colleagues inside the companies with Treasury in hand, because the model of bank treasury or bank corporate engagement is definitely changing. It takes all three parties to come together, the bankers, the treasury and finance function, and the IT organization, to have a common understanding of what the objective is, what the solution design that is going to be deployed to instantly collect, make use of APIs to do more direct, instantaneous delivery of information, instruction delivery.
The other area, which in my mind, I think is also becoming critical, is how with digitalization comes explosion of data, and how do you handle data in a more seamless and more meaningful manner. And treasurers and typically finance departments needs to kind of maybe adapt a little bit in terms of using these complex data sources, including today feedback loops from the consumers. I mean, one of the beauty of digitalization is that you can get instant feedback on your products and services that go out, and then use that in the process designs, whether it's commercial in nature or in the Treasury department. One example is around how we could use data to instantaneously reconcile. And using that as an example, if you really start looking into how that journey could avoid a lot of the reconciliation that is today done on a batch basis into a more real-time basis. So the ability to understand the data, ability to synthesize it, and of course, in a futuristic model, look into AI and ML kind of capabilities to really drive efficiency in the Treasury function is something, another area or another set of skill sets that treasurers and the teams, finance teams, need to build up.
Do you have any final thoughts you might make about the role of Treasury in transformation or the challenges pertaining to that and the objective more broadly?
I think where we are seeing all this merge or kind of integrate together is really around the supply chains between the finance supply chain and the physical supply chain or the service supply chain coming together, and at different touch points. I mean, Treasury being one of the critical areas of touch point where it comes together, and it's becoming more and more critical that these integration becomes a lot more tighter. And technology allows us to do that. And we are seeing increasing abilities, whether it's API, whether it is IoT, of ability to track supply chains differently, and hence merge the technologies around payments and collections to instant reconciliation and so on. So I think as we continue to develop this space, Treasury becomes that glue where these merger happens a lot more faster, a lot more seamlessly. And hopefully technology plays a huge place in driving this change.
Getting Treasury to be more aligned across finance and into the wider commercial function. I know this, the research work points to this, but it can't be understated. There is each of our functions have to come out of their silos, and they have to, take a much more holistic, almost like we use language here at DBS called a horizontal organization. It needs to be a lot more holistic in its thinking, and while it may come down to KPIs, at the end of the day, there is a end customer that's paying everybody's wages. And as long as we keep our minds absolutely set on delighting them, then I think the future is pretty bright.
Excellent. Mark, Ramesh, thank you for your time and sharing your insight with us today.
Thank you, Piers.
Thank you for having us.
This interview is part of DBS's digital transformation campaign. It is produced by FT Longitude in partnership with DBS.